What happens if China, due to a trade war, sells all the debt that it owns of U.S.? Will that break the U.S. economy? We're going to talk about that. So put a yes if you think it will, or put a no if you think it won't in the show notes, would you please? Comments, and of course, always smash the like button too. All right, so I get this a lot. Josh, don't you understand that U.S. currency is going to collapse? You know, we're all going to be, I don't know what's if it collapses, we're going to be going back to Stone Age, I guess. I don't know. Josh, don't you understand Trump? He's making the Chinese mad, and they're going to sell their debt in a market fire sale, and we're all going to suffer. Josh, don't you see there's too much debt out there? You know, whatever. Obama, Trump, you name it. I get that all the time. All right, so let's talk about that. In fact, I was reading an article the other day about a guy who I actually have some respect for in the investment industry, saying he thinks by the end of 2020, the 10-year Treasury, the yield will be back up to 6%. I'm freaking, that's nuts. Right now, it's at 2. So if it goes from 2 to 6, that's a 300% increase in the yield, which means we have a corresponding 75% decrease in the price of the bonds in which to buy. That means if you held a bond right now, you paid $100 for it, it'd be worth $25 in 18 months if the 10-year Treasury does start going back up to 6. It's nuts. All right, so let's read this. I found this article pretty interesting that I thought you might be interested in from The Balance. I'm a big fan of thebalance.com. They say, who owns the U.S. national debt? The biggest owner is you. All right, so let's talk about it. The U.S. debt was $22 trillion as of February 2019. Most headlines focus on how much the U.S. owes China, or how much they own of us, one of the largest foreign owners. What many people don't know is that the Social Security Trust Fund, i.e. your retirement account, owns most of the national debt. So here they break it down: intra-governmental debt and public debt. Intra-governmental and public. So public debt is 73%, of which this is a portion of what China owns. And this is what other governmental agencies own, like Ginnie Mae's and Freddie Mac's and whatnot. All right. Intragovernmental debt, let's see, we'll talk about that, is about $6 trillion of the total $22 trillion or $21 trillion is owned by the other federal agencies, 230 federal agencies to be exact. Let's see. By owning treasuries, these agencies can transfer their excess cash to the general fund where it is spent. All right, so of course, one day they'll need to redeem their treasury notes for cash. The federal government will either need to raise taxes or issue more debt in order to give the agencies the money they need. So Social Security owns the most by far intragovernmental debt. And of course, what they do is I'll read it right here. Why would a government owe money to itself? Some agencies, like the Social Security Trust Fund, take in more revenue from taxes than they need. Rather than stick this in cash under a giant mattress, these agencies buy U.S. Treasury debt with it, and then by owning the treasuries, they take the interest they get and they send it to the general fund so the feds can put roads, do hospitals, everything the federal government does. A freaking Common Core for your local school, which is nuts. Now, at some point, though, when Josh retires, there's not enough taxes to pay that, so they're going to say, Social Security, they're going to go knock on the Federal Reserve window and say, hey, I need my money. And the Federal Reserve says, we don't have any money, and the Federal Reserve will then have to raise more debt in which to pay old Josh's money. All right, the U.S., Social Security, well, I'm not going to go with this, but Social Security owns $2.8 trillion of federal government debt. OPM for government retiree management owns about $1 trillion. The military retirement fund is about $1 trillion. So you can see just between those three, Social Security, OPM, and the military, that's what, $4 trillion in debt right there alone. Medicare is 308, and then you can see the rest. Public debt. Now this is where China comes in. All right, the public holds the rest of the national debt of $16 trillion. Foreign governments and investors hold 30% of the public debt. Individuals, banks, and investors hold 15%. The Federal Reserve itself holds 12%. Mutual funds, roughly 9%. State and local governments, 5%. And the rest is held by pension funds, insurance companies, and savings bonds. So foreign investors and governments, 40% of the public debt, which is 73% of the total debt out there. But watch. Are you ready? Foreign 6.2%, 6.2 trillion is owned by foreign governments. China owns of that 6.2, 1.18. That's it. 1.18 trillion of $22 trillion in debt. China owns all of 1.18 trillion. Japan 1.03 trillion. The Federal Reserve itself owns 2.46 trillion. Mutual funds owns almost 2 trillion. State and local government, including their pensions, owns almost a trillion, almost as much as China. Banks own 674 billion. Private pension funds own 600 billion. Insurance companies another 226 billion, and U.S. savings bonds, i.e., mom and pops who own that, another 158 billion. So China owns, let's say, 1.1 trillion in debt. The Reserve owns 2.5 times. The Federal Reserve, our own Federal Reserve, owns 2.5 times that. Mutual funds owns almost double what China does. I mean, it's just crazy. Japan is the next largest owner of our debt at right about $1 trillion as well. As you can see, if you add up the debt held by Social Security and all of the other retirement pensions funds, almost half of U.S. Treasury debt is held in trust for your retirement. Think about that. Half of U.S. government debt is held in trust for your retirement. If the United States defaults on its debt, foreign investors would be angry, but current and future retirees would get hammered. What do current and future retirees do that foreign investors theoretically should not be able to do? They vote. Do you think they're going to vote for people who say we want to have a hammering of our own retirement accounts in order to pay China? No. All right, so why did they do all this? I thought it was pretty interesting. The Fed needed to fight the 2008 financial crisis, so it ramped up purchasing $2 trillion of treasuries. It stimulated the economy by keeping interest rates low. So it was interesting. They bought up bonds. They purchased all kinds of bonds to put money out in the economy, and at the same time, they kept interest rates low. It's interesting how they do that because, generally speaking, when they're putting money in the economy, they're devaluating the currency. They're inflating it, which means interest rates go up. They kept the short-term rates low, and at the same time, their helicopter Ben was dropping cash on the economy. It's just interesting. I mean, and basic economics says one of those things should not exist. If you're going to spread money out there for every friggin' Joe, Tom, and Harry, the interest rates have to go up because the value of the dollar is being devalued. On the other hand, they kept interest rates low, and it didn't happen. So they're spreading money, and the interest rates stay low. And I thought this was interesting right here. The Fed ended quantitative easing in 2014, and as a result, interest rates on the benchmark 10-year Treasury rose from a 200-year low of 1 that's a 10-year Treasury. They control the federal funds rate, which is basically a 3-month, 1 month, something like that, what banks loan to each other. They don't control the long-term bonds. And yet, look at that. 1.442 is the interest rate in June, a 200-year low of 2012. And now, as we sit here today, in June of 2019, 7 years later, it's at 2.1. Crazy. Let's see here. China owned 1.1 trillion of debt, Japan 1.08, but both Japan and China want to keep the value of the dollar high, or at least higher than the value of their currencies. And the reason for that is because when you have a high dollar and a cheap foreign currency, the foreign currency has easier way to export products to us. It's cheaper for us to buy their products than it is for them to buy ours, so it allows them to keep exporting goods to us for cheap. That's what happens. So the Chinese, they can threaten, saber rattle or whatever all day long, rabble-rouse about we're going to sell all of our debt. And if they're not going to, but they could do that all day long. And the theory would be that would kill the dollar. And inherently their export business goes out of business. We're not going to buy any goods from China because they do issue a lot of crappy stuff first and foremost, but we're willing to buy crappy stuff because it's cheap. And we just replace it with other crappy stuff that's cheap. The minute that stops, though, we're not going to buy anything from China. We just buy it internally in the U.S., and immediately China's economy is done because they can't send stuff to the U.S., which is why Trump rules the roost on his Chinese tariff war, because he knows China needs us more than we need them. That's a fact. The minute they can't export to us is doomsday. And it already is because they're commies. Commies never win. That's all there is to it. So that's what the interesting thing is. What if China sells all their debt? The dollar will collapse or do? No, not at all. Despite China's occasional threats to sell its holdings, both countries are happy to be America's biggest foreign bankers. Again, we're talking $1 trillion on $22 trillion in total debt. Not a huge amount. Let's see. And then they talk about the other countries. The UK is the third with less than $700 billion in debt. All right. So again, the issue is if the dollar were to collapse, Joe retiree and Jane retiree would get hammered more than China, more than Japan combined. Combined. It's not going to happen. They're not going to allow the dollar to collapse. We're not going to see a 6% 10-year treasury in 2020 at all. Now, I got to tell you, no one knows how this is going to end. You could be Milton Friedman, you could be John Maynard Keynes, you could be Paul Krugman, you could be freaking, what's the man over there, Larry Kudlow. No one knows where this is going to be. No one knows. My inclinations will probably be just like Japan. Japan's had interest rates low for a long, long, long time. Negative interest rate policy, even where they're actually losing money to buy Japan debt because they're doing whatever they can to stimulate the economy because they got no growth. We get a little bit more growth. We're going to get growth, and so with our growth, we'll have a higher interest rate than Japan. But just because the interest rates are low does not mean the economic growth is through the roof, as Japan we can see. And that violates every economic principle ever taught still to this day in textbooks. And I would imagine U.S. would be like that. Lower interest rates, higher growth in Japan, but certainly not Reagan-esque, that's for sure. It could be, and if it does, we will see interest rates going up. But remember, no one is going to sit there and allow for a currency to be devalued to the extent of a collapse or a 6% 10-year treasury. Think about all the pensions, all the companies, all the government agencies, the military, the TSP, the pensions for the military, pensions for your state and local municipality, retirees from the federal, not the Fed, but the civil service and whatnot. They're not going to sit there and say, hey, we had $100 and now it's worth $25 because China sold their debt. No one's going to sit there and let that happen. It's not going to happen. It's not. It's probably going to be a slow and steady, just like moving along, just like Japan. The currency is not going to collapse. It's impossible for it to collapse simply because of the amount of debt that the federal government owns itself. They're just not going to watch it fall so the retirees can take a 75% hit because the retirees are going to vote themselves a pay raise. That's all there is to it. So I'm not worried at all. I do worry about socialism, don't get me wrong, encroaching part of socialism where you can just spend. But I'm not worried like, oh my goodness, we're going to have a collapsing currency. We're all going to be bartering with gold coins. It's just, anyway. If you like it, smash. Don't forget to say something in the comments. And of course, don't forget to share the video and we'll see you next time. Thanks now.